Well, thank you everyone for being here today. I really appreciate it. It's great to bring some Miami heat to the Alps.
There we go.
And I'm a resident of the city myself, and I'm very happy that we're having this conversation. I think it's important for the forum. I want to welcome our panelists, of course. Francis Suarez, Mayor of Miami, thank you for being here today. Bienvenido.
Gracias.
And Sheila Warren, she is the Chief Executive Officer of the CCI, the Crypto Council for Innovation. Sheila, welcome.
Thank you.
And a veteran of the World Economic Forum, too. You've been here before.
That's true.
A timely conversation, like everything, like most of the topics that are discussed here in Davos. And I want to start by asking you, Mayor Suarez, back in the fall, when we last talked about Miami and what was happening in the city, this movement that you've created, you were the first lawmaker to announce that you were going to take your salary in Bitcoin. With everything that's going on today, would you make that decision again today?
Yes, and I still am taking my salary in Bitcoin. I will note for the record that it's not my only salary. so I think it's a different decision than if a person was deciding to take their salary in Bitcoin if it was the only source of income for them, right? I have the luxury of being able to think long, right, in terms of my investment in Bitcoin. But I think for me, I know this may sound a little counterintuitive, but I don't focus strictly on the price, right? If you've looked at the price historically of Bitcoin, there's only been a few years where the price has gone down. Almost invariably, every single year the price goes up, and it goes up significantly. And I think what I focus on is the base technology. And if you want to look at price, which is a fair thing to look at, just like everything else.
Like any other asset class.
Like any other asset class. I think the fundamental question is whether the price is 30,000 or 40,000 or 20,000 or 10,000, right? It still requires 30,000 US dollars to buy one Bitcoin. Think about that. The market has valued this system, right? The Bitcoin network system at 30,000 times more valuable than the US dollar, which is the base currency of the world. That's shocking. And I think the reason why is because Bitcoin I think it gets down to one fundamental word, which is trust. Trust is the most elusive component in our world right now. Who do you trust? Do you trust a politician? Do you trust a member of the press or information? And I think one of the reasons why Bitcoin has gained so much value over time, over 10 plus years in existence, is because people have fundamentally trusted a program that was created by humans, although it's authorless, and is not manipulated by humans, as we've seen human manipulation create a lot of the chaotic problems that we're seeing in today's economy.
So the argument for decentralized currencies, basically. And Sheila, it seems that now the world has learned the other part of the equation when investing in any asset class, which is risk. Until now, the conversation was focused on returns.
Reward, yeah.
But any responsible investor would also look at the risk involved in those kinds of returns, especially in the last few years for crypto assets. Tell us a little bit about the CCI, because it was recently created, this Crypto Council for Innovation, and also the lessons of the past few weeks for investors in the crypto asset space.
Absolutely. So I'll start with the latter. I'll note that I also take a significant portion of my salary in Bitcoin here at CCI, but it is a mix, again. It is a mix of different kinds of assets that I'm taking. And I think that what we've learned is that there is a difference between systems that have been around for over a decade, as the mayor pointed out. Over 10 years, the Bitcoin network has been in operation. Ethereum coming up on that time frame. And other things that are very new and much more experimental. And so the reason I think that we see so much media attention and other attention focused on some of the volatility, the recent, I'll just name it, Terra Luna death spiral that happened, is simply because we're in a much more transparent environment. This technology and this ecosystem by nature is more transparent, so things that happen in it get a lot more airtime. They get a lot more play. And so I think the thing to note is, like with any investment, with anything that you're doing, and I'm not here to give investment advice, it's important to do your research and understand that something that's been around for 10 years is not the same thing that's been around for 6 months. Those are not the same thing. And I think that would be abundantly obvious, but it often isn't, because people sometimes don't pay that kind of attention to it. Now at CCI, part of what we're focusing on at the Crypto Council for Innovation is the idea that we are an industry that has arrived. And I will tell you, in wandering down the promenade, I was just commenting to a colleague that in my first, when I was at the forum, my first year as a forum staff member in Davos was 2018. And then you had crypto cave, crypto chalet, crypto tower, whatever. Now you see a little bit of that, but you also see some of these brand names that are really known. You see Circle, you see FTX, you see Polygon, you see Filecoin, you see all these different kinds of offerings that have shown that they have legs and that this is a real industry. I think what we're seeing is that regulators and policymakers around the world are recognizing that this is not only here to stay, it is something we have to take very seriously because it gives us an opportunity to correct some of the legacy mistakes we've made in existing institutions. So we know we have systems, whether it's what we call the Web 2 environment and technology, whether it's legacy financial institutions that have created stratification. There's inequality and inequity baked into these systems, not through design necessarily, but through response to regulation, to the environment, to demand-side signaling, and to who is making money when and how. So the creation of more decentralized networks that embed concepts very familiar to a forum audience of stakeholder capitalism through the governance mechanism of these systems is something we have to be talking about in terms of making policy. And we're here to provide the evidence that that is not only a legitimate and robust way of doing business, but it can provide a model for inclusive growth.
And I want to talk more and ask you about the executive order signed by President Biden on this and some of the initiatives in Congress. Senator Toomey is here in Davos, and he has a plan set forth. But going back to you, Mayor Suarez, we were talking before we came on stage about how quickly things change in the crypto asset world.
Sure.
And the challenge seems to be when you're creating a strategy for a city like Miami to become a city that's inclusive of this new sector in the economy, to go beyond the tactical and be strategic about it. Does anything change when you have assets like Bitcoin falling by 25 to 50%, or Terra or Luna becoming almost worthless? Does that change the plan, the strategy, the vision of what you think of Miami?
I would say no, Enrique, and the reason why is because I'm looking at it from a different perspective. My perspective is building an ecosystem. So, and I'll give you 3 examples. One is FTX paid $200 million to name the arena where the Heat play. Right, that's $200 million US dollars, right? The Bitcoin conference, which left Los Angeles and is in Miami, is 50,000 attendees, which creates tens of millions of dollars in economic development. And the number of either funds or exchanges that have headquartered in Miami, companies like blockchain.com, eToro, exchanges like Galaxy, right? Funds like Galaxy. Those are creating hundreds of $100,000 jobs. So when you look at our ecosystem, whether Luna, Terra Luna has succeeded or failed, whether Bitcoin is at 30,000 and is at 60 later or 100 later, and by the way, everyone, because we understand the press always likes to focus on the things that are kind of exotic and controversial. We get it. That's what people supposedly want to see. But you got to look back sometimes in time. And if you look at an asset like Bitcoin, and you just take it back a year, or you take it back, 5 years or 3 years, and it's a pretty young asset class. The gains are obviously astronomically high. So, and again, we're not here to give investment advice. But you said something that I think was super important. So, from an ecosystem build perspective, no doubt that it's a winner for us, 100%.
You mean for Miami as a city?
For Miami as a city. And I would say for any city, right, in terms of building an ecosystem of creating high-paying jobs and leaning into what is, I'm convinced, generational technology, right, that's here to stay. Whether it's up or down, it's here to stay. But I do want to refocus on a word that you used that I thought is critical, and I'm glad you used it. I'm glad you said it, which is risk, right? I think we live in a world where there's almost a presumption like you have to always, when you invest in something, it always has to work, You always have to, you always have to gain.
Well, you wish that's the case, right?
You wish, right? And I think you have correctly said that, you know, when you invest particularly in new technologies, it's high risk, high reward, meaning that, you know, if something works, there's a high reward, but if something doesn't work, it's a high risk, right? And I think everybody has to be conscientious of that dynamic, which is what happens when you invest in new technology.
And that's what seems to be missing from the dominant narrative, coming from the crypto assets interests and organizations and individuals. What's missing from that dominant narrative is that this is an extremely volatile asset class. And I think now people are realizing that in some cases in the worst possible way, losing their investments or their savings.
I think we have to be very honest about the fact that there has been real consequence to real people, right? Real people did lose money in some of these projects, and I think it's really important for us to take seriously as an ecosystem to understand that we have a responsibility to be properly educating people about the risk that they're assuming in different projects. And I pointed out the time frame was kind of one. You know, I didn't buy Apple. Well, I was like 5 or whatever, but I didn't buy Apple in '92 or whatever. You know, and so a lot of people probably shouldn't be buying whatever it is. You know, at the early days. The difference I think now is because of the nature of our media, the fact that a lot of these projects launch online. There's really not gatekeeping access to some of these things, and so people are able to do things they couldn't do. There's a lot of, I think, analogizing to the internet, and I've always found this problematic, because if the internet was kind of a horse in terms of its development, crypto is a jet. It moves extremely fast, and part of that is because we do have the internet. We have the ability to pull talent from all over the world, and so when the mayor talks about this as an economic growth engine, I think we have to take that extremely seriously, as we're in a world where more and more people, their jobs are being taken away, whether it's by other technological advances, whether it's by realities around climate migration, all these other kinds of things that are factors that are coming in, or even kind of the inability to travel because of health restrictions and things like this, quarantines. This is a technology that can employ people anywhere that there is baseline connectivity, right? And so, yeah, please.
I was just going to add a few things. One was, you know, there's a lot of volatility in tech stocks generally right now.
Correct.
Tech stocks are taking a beating. Netflix disrupted, Blockbuster, and now itself is being disrupted. Peloton, which is sort of a brick and mortar company that has a great technology, has also lost a significant amount of its value. So, and by the way, there is never an interview that I do where if Bitcoin is going down or a crypto asset is going down, that volatility is not mentioned. So I can tell you in my world, volatility always comes up. Actually, volatility comes up even when the price is up.
Going up, I was going to say.
Because you always have to talk. The press, respectfully, and I would say present company excluded, they always have to present the opposite argument, right? Yeah. Which is understandable. You want to have both sides of the argument.
Not even that, more of a nuanced argument, I think, which that's what I was trying to get to with this idea of a dominant narrative. It doesn't mean that it's never discussed, but it means that it's overwhelmingly lost in the conversation.
I mean, every interview that I do, volatility, when it's crypto related, is a topical point.
And we've been having this conversation for a while now. When I first interviewed you, and I want to ask you about that, some of the tangible results you've had in Miami, because it's already been, since that famous tweet, how can I help?
Yes, 2 years.
2 years.
Incredible.
I think by now we can get a better idea of what's happened in the city.
Yeah, because at the beginning, as you know, it was sort of anecdotal, right? We could feel something happen, we knew something was happening, but we couldn't quantify it. And now the KPIs that we've seen, that we've been able to measure, for example, #1 in the nation in tech job growth, #1 in tech job migration, #1 in wage growth, #1 in pandemic recovery. We've moved $2 trillion worth of assets under managed companies to Miami in 18 months. We've grown our VC pipeline by 400%. And to put that number in context, if we were to grow our pipeline by that percentage for 2 consecutive years and it was zero sum, in other words, Miami's gain was, for example, San Francisco's loss, we would theoretically overtake San Francisco in 2 years. So that's how staggering the growth has been. And Financial Times concluded that based on all that, we were the most important city in America. So, it's been an exciting time to see the city that we grew up in sort of take its rightful place in the world as a global city that I think is sort of metamorphosizing from the capital of Latin America to a truly significant city that's in the center of 5 mega markets: New York, California, South America, the Middle East, and Europe.
We both have, well, your children are older than mine, but they're still fairly young. They say that with young children you have small problems, and with older children you have bigger problems, right? And with everything that's happening in the city and these tangible, measurable results, also come bigger problems from Miami in terms of poverty rate, inequity in the city, access to affordable housing, climate change, which we've discussed in the past.
We have.
How are you addressing those?
Well, there's some good news on those fronts as well. Poverty in the last 10 years has diminished in Miami by 50%. We used to be the top 5 poorest city in the country. Now we're 115. We are building affordable housing by the billions of dollars. We have a plan called Miami Forever, which dedicates $100 million to affordable housing in our city. We actually borrowed money, which is very unusual, to tax ourselves to build affordable housing. We're leveraging at a 15 to 20 to 1 rate with the private sector capital stack, meaning that we're getting about $1.5 billion to $2 billion worth of affordable housing projects for the $100 million that we're spending. That's on top of the $100 million that we already spent through the Community Redevelopment Agency, of which I was a board member when I was a councilman, and that transformed one of our impoverished neighborhoods called Overtown. It was a food desert. We brought in a supermarket. We created a tremendous amount of affordable housing in that community. And I think what's important is that there's a holistic impact. Our homicide rate was reduced last year by 23%, which is a huge counter-narrative to what's happening in urban America. This year, we're down 40%. That's a 63% reduction in a year and a quarter, almost a year and a half, which is a completely different story than what we're seeing in cities across America, unfortunately.
Sheila, we're talking about regulation, right? This evolving regulation, what does that mean for the future of crypto assets? I think, if not all of the central banks, most of the central banks are having this conversation about, a digital currency. How does that shape the landscape, the horizon for crypto assets?
My view has always been that we're going to see a panoply of digital currency offerings. There are going to be CBDCs, central bank digital currencies. These are fiat. They're issued by a central bank. They're exactly the equivalent to the paper you hold in your wallet, just digital. There'll be stable coins, right? So those are pegged to an extrinsic asset, whether that is pegged to the US dollar in some cases, if you pegged to any fiat currency, or pegged to something else, pegged to the price of, pork futures or Miami housing index, whatever it might be. And then, of course, crypto, Bitcoin being the kind of classic example, Ethereum, many, many other offerings as well at this point in time. All of these things, first of all, are not monolithic. Every CBDC will not be the same. Every crypto is not the same. Cryptocurrency is not the same, right? They are designed with a particular frame in mind, a particular orientation. There are myriad design choices around how secure is it, how private is it, how fast is it, all these things, how scalable is it going to be, how early. All these decisions are made, and frankly, the market is going to decide what is the value of these things, how usable are they, how important are they. I agree with the mayor, I think we've seen the importance of Bitcoin being proven over the fact that it's still here for a decade, and the price speaks for itself over time. These kinds of hiccups aside and the kind of up and down around it is reflective, I think, at this point of larger market trends and general kind of economic stability in our broader society, which is a function of a lot of different things. But I think the difference now from maybe 10 years ago, 5 years ago, I would even argue 2 years ago, is 2 years ago we didn't have the evidence that we have now. So we can now actually bring data to the table to regulators and policymakers and say, here's how crypto is making a difference. Here's how it's providing jobs and growth in a city like Miami. Here's how it's providing opportunities for people who've been excluded from financial systems in the legacy environment.
So go ahead.
I was going to just jump in on something that she said. I think, and it alludes to something that you mentioned at the beginning, which is, I think part of the volatility is that Bitcoin in general, and we're just using Bitcoin because it's the most well-known sort of the digital currencies, it's acted more as a store of value. And so there's been large margin trading, there's been large derivative trading on Bitcoin, and that creates volatility, right? They thought it was going to be, or there was a thesis that it could be a hedge against inflation. It hasn't quite turned out that way in terms of the statistical correlations. But I do think that once, and I believe this will happen, and there's a lot of reasons why it'll happen, we can get into them if you want, but once Bitcoin transitions from being more of a digital asset to acting more like a currency, right? I think there you're going to see a lot more price fluctuation because price stability, because there won't be, it won't be traded as a fluctuating commodity. It will be used as a currency.
And you think regulation will play a role in helping that transition?
Absolutely. I think I absolutely do. I agree that, I think we have an opportunity as a country to lean into this generational technology. And if we're smart about it, we will not go the way of Russia and China, right? There's nothing we should agree with China and Russia on these days. And so I think we have to understand that this is generational in nature, and that this is going to be disruptive, and that while we should always seek to protect people to the extent that we can, we protect them against fraud. We don't protect them against risk. There's two different things. I think government has had a tendency over time to try to protect people against losses. And you can't protect people against losses. That's the American system. That's what makes investing. That's the risk component to winning as well. If there was no risk, then there's no reason to have interest rates. There's no reason to have a return. So I think sometimes economically we don't talk about these subjects honestly.
And I'm glad you touched on that point, because some of the criticism around Miami coin was that it wasn't just an issue of risk, but it was taking advantage of people, and you addressed that. What was your reaction to that criticism?
I think when a technology works, people will applaud you, and when a technology seems to struggle, they're going to criticize you. I mean, I think, and that's fair. I think from my perspective, what I focused on that particular technology, which was being developed by an outside company, was one, that it was interesting because it was providing a benefit to a city, which has never happened before. That benefit, which is in a digital wallet controlled by the DAO of Miami Coin, by the decentralized community of Miami Coin, $5 million of that was given to the city, and we used for a rent stabilization fund, which was a critical need. In our city, we had rents that were, like I said, out of control. So anyone who was experiencing more than 20% increase in rents could tap into that. So that was an example, from my perspective, of a technology not developed by the city, not influenced by the city, but that benefited the city by virtue of its protocol. I think it has other tokenomic issues, which I've been very clear about. And look, Bitcoin has been super successful on certain things. And then I think there's some things that we're going to see in terms of evolution that will hopefully make Bitcoin more utilized and more influential in providing solutions in not just in our country, but in our world.
I want to open the floor to questions, and just we have a couple of minutes before that. Sheila, take us behind the scenes on some of the conversations you're having with policymakers and lawmakers in Washington. I mean, we're here, and no one's going to know if you share something that could sort of shed some light on what the reaction in Capitol Hill in Washington has been to this conversation around crypto assets.
Well, first of all, let me just start by saying this is not just an American conversation. It's very much a global conversation. And so the idea, CCI is a global alliance, and the predicate is that policy is often contagious. And so something that happens in one jurisdiction, or a proof point, like the city of Miami proving that this is an industry that's attracting jobs and growth and an economic engine, is contagious to other cities who are now trying to mirror what the mayor has affected in Miami. Similarly, the approaches that some countries take, if successful in attracting jobs and providing more inclusion and all these kinds of areas that are laudable public policy goals, are going to be contagious to other environments. And let me kind of say this. I think there is a new understanding in the American policy environment. It's very varied. The knowledge of this technology is very varied, and the offering is very varied. But no one is really, like with the general public, nobody's waiting for the US to act here. Right? I mean, you've got the UK, who post-Brexit is plowing ahead. Similarly, I think, with the thesis that the mayor had, which is that this can be an industry that's going to provide significant growth and an opportunity for the UK. You've got Singapore doing tremendous experiment, one of the earliest to look at CBDC, now thinking very actively with the industry collaboratively about regulation. You've got India looking to see, they have a very advanced payments infrastructure. How can, and if so, how can a blockchain or any kind of digital fiat or crypto support that environment that they're building there? So you've got a tremendous amount of activity happening in the EP everywhere all over the world. Now, in Washington, going into a midterm cycle, we are seeing the executive order. I was a big fan of the executive order. I'd love to hear the mayor's thoughts. It landed two things for me that I think were problematic prior to that executive order. One, crypto as an industry is an industry. It has arrived. It is not going anywhere.
Economy, yeah.
It is impossible to dismiss this as a flash in the pan, as a temporary thing, right? And there was a time when we thought blockchain technology might just become part of a tech stack and go the way of, HTTPS or something like this, right? Where no one really talked about it. It was just kind of something we used. This is now an industry. It is a multi-trillion-dollar industry. The second thing is, I think you can no longer be a credible person of substance in the United States if you are not speaking about crypto with nuance. Right? So it is impossible after that executive order to talk about this in black and white terms. So just as someone's like, crypto's the answer for everything, that's not credible anymore. Or someone who's saying there's no value here, equally not credible. What that executive order landed was the idea that we have to have a holistic framework across multiple agencies, ideally globally coordinated with peer counterparts, that is looking at this as the ecosystem we're building. We're building the new digital economy on the back of this innovation. And I agree with the mayor's framing of this as a once-in-a-generation opportunity to not only create that system, but to correct the imbalance and inequity and accessibility issues of previous systems.
Totally agree with that, 100%. I think the executive order is an opportunity, right? I look at it as an opportunity for a varied amount of voices to get into the conversation. We did a crypto conference for mayors in Miami as president of the U.S. Conference of Mayors. And I would love for mayors to be able to have a greater voice in shape policy on crypto, because I think we see it as a democratizing force in our neighborhoods. A lot of people in the minority communities of our major cities have crypto accounts. Yep. And they feel actually empowered to be able to invest in crypto and do it in ways that potentially are not as risky as some others. But even if they do take risk, they do it because they see the potential in some of this technology and they want to be a part of something new and different. And by the way, they're often restricted from being able to risk money in the kinds of assets, the alternative assets, that is what wealthy people are able to. The thing about wealth is when you're wealthy, you're deemed by the government to be smart enough to lose your money.
That's exactly right.
But if you're poor, you're not apparently deemed smart enough by the government to lose your money, which is, I think, a hypocritical situation. And frankly, remember that the alternative is also true, which means that if you're wealthy, you're given access to a variety of opportunities that can create a tremendous amount of wealth, 10x, 100x type of wealth. And if you're poor, you're excluded from all those opportunities.
Starting with the educational skills.
Yes.
To become that
well, I think that's exactly right.
Sophisticated or
I think that's right.
Investor.
So I've taken issue.
Let me just say, no, this does not involve education at all. You can have a PhD from MIT, and if you don't have a certain amount of wealth, you are not considered a sophisticated investor.
That's exactly right. So let's talk about this, right? And let's put a really fine point on this. So
we have time for one question. So
SEC regulation, I'll be quick. We talk about consumer protection. We have used that in the United States as a way of basically disallowing people who do not have a certain level of wealth from engaging in certain kinds of activity in the guise of protecting them. Wouldn't it be something if we shifted our frame and said, rather than consumer protection, which is we don't think that you are sophisticated enough because you don't have this wealth privilege to make certain decisions on behalf of your family that you know what's best for more than anyone else could do, to a consumer education frame and talked about consumer empowerment. And so rather than a 1,000-page SEC disclosure, I'm a lawyer, I'm qualified to read that, there's no way I'm reading a 1,000-page SEC disclosure, and that's what's required. Instead, you could have just-in-time education where you could say you need to prove through a DAO model or some kind of other process, you understand the relative risk of this asset class and of this particular asset in the asset class, and then you'd be permitted to make the investment. Who are we to say that you're not capable of doing that if you're, look at GameStop alone, right? Who's the reason you're not capable of making that decision on behalf of your financial well-being?
I think that in itself is a fascinating conversation that we could spend an entire half an hour on, and I hope that we do at some point, because there are some, I think, valid counterpoints to that. But I said I was going to open the floor for a question, and we're running out of time, so who wants to ask a question? Raise your hand. Over here. We have a microphone, sorry about that.
Thank you very much for insightful issue briefing. I would like to have your take on the current crypto-related agenda within the World Economic Forum. You who are coming here, Mia Suarez for the first time, and you, Sheila, who has been very experienced also setting up this agenda. So which topics, what is your take on the current agenda, and which topics would you like to see next time at the WEF related to crypto and blockchain? Thank you.
Sure. I do think that it's a timely conversation around crypto and the environment and how crypto is affecting, how the crypto industry is an influencer in kind of thinking about those aspects of the SDGs and ESG as a general matter, both because that's critically important to the forum and has been for a long time, but because now as an industry who's arrived, we have a responsibility to take that conversation forward seriously. So I think that was very timely. I'd love to see conversations about crypto and inclusive growth. I think that the issue of financial inclusion is one that is given a lot of lip service, but we now have, again, this evidentiary record where we can prove and examples of how this is actually happening in various parts of the world. So that's a conversation I'd like to see.
I think.
Go
ahead.
So I wanted to ask, how important is the buy-in for big business? Because Fortune magazine published their Fortune 500 annual CEO survey today, and 90% of the CEOs said they had no plans to either use crypto or incorporate it into their businesses. Can you react to that?
I would ask you how old are they? Yeah, I do think, and I don't mean that in a disrespectful way in any way, but I do think there is a generational issue. And what you see across politics, not just across the corporate landscape, is increasingly those positions of leadership are held by boomers. And my dad, who is a mechanical engineer, 2 graduate degrees from Harvard, written 6 books and speaks 5 languages, has a hard time. He's 72. He has a hard time understanding crypto in the way that I do, right? And my children are going to understand the metaverse in ways that I can't, right? So it's not an insult to say that it's hard for a particular generation to grasp a certain generational concept. It just is a reality. And so I would do a correlation on that 90%.
I'm going to be a bit more cynical in my response, Jennifer.
Okay.
And so I think that there's a lot of vested interest in the current regulatory environment, which has spawned certain businesses. And a lot of businesses are predicated upon the regulatory environment exactly how it is and disallowing certain kinds of digital advances, whether that is cryptocurrency or whether it's crypto assets or just Web3 as a general ecosystem that is decentralizing power. Advertising models are going to change in Web3, right? You're not going to have a centralized platform owning your data and making tons of profit off it. So there are vested interests that are not interested. They're actively not promoting this kind of opportunity because it's a threat to the core aspect of their business model. So a little more cynical related, I think, but different frame on that.
With that, I'll quickly wrap up. Thank you so much, Sheila, Mayor Suarez, for this conversation. I think that we can just say it's to be continued. So it is important that it started here at Davos, and it started with both of you. And
with you.
It started in Miami.
It did.
Just one thing before I wrap up. I have to take off my moderator hat and put on my CBS News journalist hat. I always ask the mayor if he's at some point considering running for president. So I'll ask you again. Will you be the first Latino U.S. president?
The first Latino doesn't mean that I'm running for president, but I think it's possible that I could be the first Latino U.S. president.
I keep asking him every year, so we'll see. Thank you so much.
Thank you,